Happy 2023, guys. We took last week off on the video. Truthfully, a little bit of it was my poor planning and just forgetting what day it was, but here we are, nonetheless, 2023. Happy New Year's, guys. We got some good stuff. Inflation numbers came out, and here's kind of my crystal ball for where things are going for rates here in the next few months. For screen sharing here, happy January 12th. All right, team. Rates, Freddie Mac shows 6.33. That is down a little bit, but look at this, guys. This is a nice, look at this green movement. Green is good, guys. Remember, we've had rates come down. They came down, they went back up a little bit. Now they're back down. Look, this red line, you guys can see this, this horizontal, the Fibonacci level of 38.2. It hasn't been broken. You can see we've tested it 3 times. So if we can break above that, that can be very good things for the future for lower rates. You guys can also see all these squiggly lines, right? You see the black line, that's the 50-day moving average. You see a little black line at the bottom. It's now acting like a floor of support. That's a good thing. And then you guys can see the really top line, the light bluish. You see how that's coming down? That's the 200-day. Here's the deal. We may be a few weeks away from this, maybe a month or two, who knows if it happens. But if that black line continues to go up and it crosses over the blue line, that is a very positive thing for lower rates in the future. It's known as a golden cross. When it happens the other way, it's a death cross. Here, we're trending in the right direction. So even if we move sideways right now on rates, the technical signals are starting to get to be on our side. Here's what's also not sort of on our side. Inflation numbers came out, the CPI, guys. There's 2 major inflation numbers that people pay attention to. The CPI, that's the one that came today, and the PCE coming out in a few weeks. So today's inflation numbers, I'll admit, higher. I mean, it met expectations and it was 0.1 lower than, whatever. But the reality is we were thinking much lower. Here's why it wasn't. The shelter cost. And this is where I'm calling a little bit of bull. Can you tell me that from the month of November to the month of December, that shelter cost, housing prices, the cost to just put a roof over your head, rent, all that stuff, can you honestly tell me that that was the highest increase from November to December that we've seen in nearly 40 years? So since 1985, you guys can see over here where the little mouse screenshot is, that is the steepest and largest month over month increase in 38 years. I'm calling hogwash, right? I don't know about you, but I'm not seeing a lot of homes selling for more than they should. I'm not seeing for, a lot of rents getting increased. I just don't see that. I don't know where and how that number came up, but it is part of the number that's really the biggest driver why the CPI numbers weren't lower than what I was expecting. So here's the air quotes good news. The PCE number that I mentioned, that's coming out in a few weeks. And that's the Fed prefers that one. They like the PCE as well, but it does not have shelter. It doesn't put the weight that the CPI does on shelter, which means in a few weeks, we think that number is going to come in lower. Ultimately, we will prove right. We will prove that there is a slowdown in the housing in terms of rents aren't going up. House prices aren't just going gangbusters. Again, the highest month over month, not happening. So when that does kick in, you'll see inflation come lower, which will help our rates. So guys, here's the rates over the past 39 years. Again, as we just said, how are costs getting more expensive, right? So there you go. Here's something that I thought was really interesting. My crystal ball, and you guys can go back a year, to last year when we were doing this. Last February, March, we said rates were going to 7%. Lo and behold, they did. Mid-year, we said inflation would peak around November. Lo and behold, they did. We're 2 for 2. We then started saying probably call it Q3 last year, we think rates will be back in the 5s. I think they're about to be, right? So and by the way, I said maybe 4s. I don't know about that. I'm moonwalking on the 4s. But back in the 5s, my crystal ball, what I've been telling clients lately, and where I truly mean this, my crystal ball is only good now up till about March-ish. I don't know where we're going to go next year. I can see a couple scenarios where I can justify why rates should continue to stay low. I can justify that with the $1.65 trillion of spending that the government approved at the very last week of the year. I can see how that can be inflationary. But here's the first time I've seen somebody throwing something out there. Realtor.com predicts that into 2023, they think rates by the end of next year are going to be 7.1. So I'm not saying that's right or wrong. Like I said, Mike can understand why they say that. I've had other folks, that have been doing this for a very long time said, we may see rates in the 10s. I don't know, right? If a recession comes and it's, puts everybody on their butts and a lot of people lose their jobs, you could probably see rates stay in the 5s. Where does that go? I don't know. So I do know that, January and February, Marchish, I'm feeling good that rates will come back down and be in the fives. But after that, there's too many moving factors out there that to really, last year I was very confident. Now I'm like, I don't know. We're going to wait and see. So here's something else too, right? That it could be inflationary. You're going to, people now might have slightly more money in their pockets because of how the tax brackets are shifting. So in other words, your taxes, you guys can see it here, individuals versus joint, everything's getting stepped up just a touch to where maybe keep a few more bucks in people's pockets. We'll see if that results in more spending or if it just offsets, inflation, which is, has gone from, the core readings went from 6.7 now down to 5.7 today. So maybe that just offsets the inflation. Who knows? All right, going to business now. If you're listening to this and you're in the, real estate building business, whatever it is, or even financial, whoever's watching this, Facebook, you guys may or may not know, they got in trouble a while back for their ads because they felt like in the housing industry, you could target what you wanted. You could target, the ethnicity, the race, the income level, gender, all that stuff. So they got in trouble saying, hey, that's discriminating if lenders ran ads that went that targeted. Well, they've since been working with the government agencies, and they now think they have something where it's a nice, it works where it doesn't exclude based on those things. So it's coming out. So if you guys have done Facebook ads and then don't anymore for this reason, you might just pay attention and start getting yourself reacquainted. My group certainly is. If you guys want to chat about it, we can certainly talk about, doing something together, perhaps. Wells Fargo just thought this was interesting, basically saying, hey, the world's, they were super hungry and they were really big on the mortgage front. They're basically saying, yeah, we're pulling back and we're now only doing loans focusing on existing customers and minority borrowers. Thought that was interesting. So there's no more correspondent stuff to where, companies like us, they're going to try to, they're taking that out to where everything's going to be pulled in-house. So I thought that was interesting. So they've currently experienced a 60% decline. Also thought that was a pretty big deal. Guys, local news, Frisco, Texas, congratulations. You guys are getting a Universal Studios for kids. It's coming. I don't know the details. I just saw the headlines that you guys probably saw and know of as well. But it is interesting. I was talking to somebody on our staff who lives up in that area and like, damn it, like I just bought a house a year ago and I'm going to be looking at this in my backyard. So this is the part that I would highlight how important it is to work with a true real estate professional, not just somebody like a realtor, for example, that can actually like tell you what's coming, who's been in tune with the property and zoning and, potential plans of what could come so that a Walmart doesn't show up in your backyard. So again, I just stress, and I know we all know this, to be a professional, know your industry, know your market, know what's coming. Don't let somebody who bought a home 6 months ago say, why the heck did we know this? And this is down our backyard. So do your homework. We will certainly do our best to help bring stuff to you when we see it. But there you go, team. So welcome to 2023. As always, we appreciate you guys for watching. I can't believe it went from like 78 yesterday down to whatever temperature it is now. It's freezing, but stay warm and call us if you need us. Have a good day, guys. Bye.